Good morning. It's me, and I got my Dunkin' Donuts, and this is now the second cup that I've had this morning. So we're raring to go. Today is Tuesday, May 3rd. I am Kenny Polcari, your host of the party, and here is what you need to know about what happened yesterday and what's happening today. Stock staged an intraday turnaround yesterday. Unbelievable. Treasuries, the 7s, 10s, 20s, and 30s all kiss and pierce 3%. The Fed goes behind the Iron Curtain today. Details tomorrow at 2 p.m. And Morgan Stanley calling for S&P 3,800 or 8% lower from here. And what do we have for dinner tonight? We're going to have the vegetable paella. It's really good. It's veggies, no meat, no fish, no chicken, no nothing. So good Tuesday morning. Stocks began the month with a bang. Early morning futures yesterday suggested higher stock prices, and then the bell rang. Stocks advanced. They pulled back. They advanced again, and then they plummeted after the latest macro data point. The ISM manufacturing showed an unexpected slowdown, coming in at 55.4 versus the 57.6 expectation. And that coincides with the latest GDP report that went negative last week. And then the 7s, 10s, 20s, and 30-year treasuries all pierced 3%, adding new pressure on stocks. And at one point, it did feel like they were in a free fall. But they put in new lows at about 2:30 p.m., sending the media into a meltdown frenzy. Morgan Stanley running with the headline that we should not be surprised to see the S&P trade as low as 3,800 if things get bad. And saying, and I quote, investors have very few places to hide, which I don't agree with. The market has been so picked over at this point, it is not clear where the next rotation lies. In our experience, when that happens, it usually means that the overall index is about to fall sharply, with all stocks falling in unison. Well, that doesn't sound so good, right? I'm not a buyer of that, but they are entitled. And then, when it felt like the bottom was about to fall out, something funny happened on the way to the forum. The algos suddenly found value in stocks and initiated all kinds of buy orders in large mega cap names that then enveloped the broader market. All the excitement began at about 3:30 p.m. and by the time the closing bell rang, all the indexes that were well into negative territory went positive, leaving investors scrambling for more. The Dow adding 85 points, S&P up 24, the Nasdaq added 200, the Russell up 18, and the transports advanced by 45 points. Now, with sectors, which sectors do you think were had the most action, right? Well, you guessed it. Communications, the XLC rose 2.8. Retail, XRT rose 3%. Home builders, XHB added 2.2. Semiconductors, SOXX rose 3.4%. Consumer discretionary, XLY, up 1.5%. You understand why? Because all of these industries, along with others, are all down better than 20% year to date. They are the industries that have individual names within them that have gotten absolutely slammed. Many of those names down better than 30% year to date. So hello, when the algos kick in, where do you think they're going to look for opportunity? Bingo. Okay, next. As noted, we saw 3% yields across a range of the treasuries, right? And that was not helping the tone early on either, as investors continue to try and understand what's next for the Fed. Look, it is a jittery market, and that's clear. And the jitters are going to continue until we get more clarity from the Fed. Hopefully, we'll get that tomorrow, right? And we should get it. Now, 50 basis points for sure, we know that's coming. But what will be the guidance, as in the earnings report? What will they say about the future? What will Jay say about the next move and then the move after that? If inflation is his prime concern, those are his words, not mine, then it will be difficult to see how he cannot continue down the road of higher rates. Because in order for him to tame inflation, he will have to raise rates at a faster pace and in larger increments to get to where he needs to be, which is most likely higher than the current published inflation rate, which at the last look was 8.5%. And when the latest elevated PPI, the Producer Price Index report, which was 11.2%, makes its way down through the Consumer Price Index, then investors will be wishing that inflation was only 8.5%. The next CPI report is due on the 11th. And right now, when I look at the estimate on my Bloomberg, guess what? There isn't one there yet. The column is blank. And that only means one thing. Look for higher CPI next week. So all this volatility should not be a surprise. Let me remind you about the math that I put in my note yesterday, because it's nothing more than a math problem. As the mathematical inputs change, the answer has to change. It's that simple. And then valuations have to change, and then investors need to decide what is the proper multiple that works for them in this change environment. As interest rates rise, as the economy slows, as earnings come under pressure, as the macro data weakens, the multiple that investors are willing to pay for stocks declines. It's not rocket science, it's just math. So the current 2022 full year S&P price to earnings multiple estimate is 18.2 times, which is down from year-end 2021 of 24.6 times. And the 2023 estimate is 16.6 times. Now, yes, those can and will change in either direction as we move through the year. But do you see the trend? The trend is down. And as interest rates and inflation move higher, the multiples will continue to come under pressure, which means prices will continue to come under pressure as well. That's all. It's not the end of the world. It's just a repricing or revaluation. But you have to play it smart. So here's the trick for you. In the rising rate inflationary environment, what do? Well, that depends on who you are. That depends on your age, your risk profile, your assets, your job, your family, your needs, which is why it's always hard to just have a blanket answer when somebody asks me that question. If I were 30, it would be one answer, but I'm 60, so the answer is different. Again, it's a math problem. My inputs are different from yours, so my answer is going to be different from yours, which doesn't mean that my answer is correct and your answer is incorrect. They're both correct, right? Depends on who you are. Call me to discuss it. I'm happy to talk about it. Look, this morning, U.S. futures are teasing the unchanged line, right? Dow futures are up 21, the S&Ps are up 3, the Nasdaq's up 7, and the Russell's up 2, really right around the unchanged line. But today begins the Fed negotiations. They are now behind the Iron Curtain, and unless someone leaks the discussion, which seems to be the thing lately, we will not be certain until we are. And that is tomorrow at 2 p.m. Now, what will be of key interest is how the Fed will unwind the $9 trillion balance sheet. Actually, that's probably more important than what we hear about the 50 basis point rate hike, because we already know that. That's baked in. We want to know about future rate hikes, but we want to know about that balance sheet. Eco data today includes factory orders of 1.2%, durable goods up 0.8%, capital goods ordered up 1%, and the JOLTS job openings report of 11.2 million jobs is the expectation. 10-year Treasury yields are now pushing 3+%, but continue to trade just on either side of the 3% line. My sense is that once we get the definitive news tomorrow, yields will surge up and through and then remain above 3% from here on out. It's hard to see how they won't, considering the Fed is pushing rates up. I mean, yields have to go up. Oil's trading at $104 a barrel, up from yesterday's $102 a barrel, as the European Union firmed up plans to choke Russian supply. Germany, the long holdout, now saying that they are prepared to back an immediate embargo on Russian oil. Record U.S. exports of oil are also leaving a supply void here in the United States, and that's also causing prices to spike higher. Watch for today's release of the U.S. inventory from the American Petroleum Institute from last week. And then tomorrow, we're going to get more data from the Energy Information Administration. The call is for both of these reports to show a decline in crude of 1.2 million barrels and a decline in diesel and heating oil also of 1.2 million barrels. Gasoline stockpiles are expected to decline by 300,000 barrels. And so these declines in inventory are going to put natural upward pressure on prices. Look, at the end of the day, markets were in an oversold position, which doesn't mean they can't go lower. It just means that it can remain volatile for a while. And you can see that if you look at the VIX, which is the fear index, which has surged by 85% in the last week. So think what stock prices have done and think what the VIX has done. Now, a retreat in the VIX will see stocks advance. And it would not be a surprise to see that happen if we don't get a surprise from the Fed, which I don't think we're going to get, but if we don't, then I suspect the VIX will fall, prices will rise. The S&P closed the day at 41.55 yesterday after testing as low as 4,062, now putting in a new intraday low, piercing the February low of 41.14. Surges and sell-offs are going to be the name of the game for now, and if the mood turns positive, I would expect to see stocks advance considerably. Just because they're in an oversold position, and any sense of a relief will produce that famed relief rally. Okay, so what are we having for dinner tonight? So we're going to have vegetable paella. So this is a vegetarian dish. I had a couple of people ask me for a vegetarian dish, so this one's always traditional. It's easy to make. And like traditional paella, you can easily increase the amounts of ingredients because you can feed a large number of people with a dish like this. It features no meat, no fish, no chicken. It's only veggies and rice, right? It's made with traditional paella seasoning, which makes it a paella, and it's really good, right? So if you don't have a paella pan, don't worry. Just use a large non-stick frying pan to accommodate this typical Spanish rice dish. Okay, so for this you need olive oil, you need a red onion, a red, yellow, and green bell pepper chopped. You need 6 scallions sliced. You need 5 cups of vegetable broth, 3 cloves of garlic minced. You need 1 teaspoon of crumbled saffron threads. You need 1 cup short grain white rice like Goya or Vita Rose. You need 3 cups of broccoli florets, 1 cup of fresh baby peas, 1 cup halved grape or cherry tomatoes, 12 pitted green olives cut in half, 12 pitted black olives cut in half. You need a lemon cut into wedges, and a 1/4 cup of fresh parsley chopped. Begin by heating the olive oil in this large skillet over medium heat. Add the bell peppers, the garlic, the scallions, cook for 5 minutes. Now add the broth. Stir in the saffron, bring it to a boil. Now add in the rice and stir it around. Reduce the heat to medium-low, cover, and let it cook for about 10 minutes so it absorbs the broth. Now, take it up, add the broccoli, the peas, the tomatoes, and the olives over the rice. Cover and cook that now for about another 10 minutes. Turn the heat down to make sure it's on medium-low. You don't want to burn it. Cover, cook it for another 10 minutes. The rice should end up being fluffy and tender. If it is, remove it from the heat. Let it rest for about 5 minutes. Taste it. You can adjust it for seasoning. Present this on a large family-style platter. Garnish it with lemon wedges and chopped parsley. Put it in the center of the table. And if you have a paella pan, it looks really great in the center of the table. And people just help themselves because it's a big pan. And, people help themselves with the pie. It's a great dish. You don't feel bloated after you eat it, as long as you don't eat too much, because it's just vegetables and rice. I mean, it's really, really a simple dish. But it's easy to make, and it's good for you. So in any event, it is Tuesday morning. You can see the sun is coming up. It's going to be another beautiful day here in South Florida. Until tomorrow, take good care.